Today I'm thinking she will. They've all, Lockhart, they're all consistent with it. They want to do it, even though nothing will change by the time they get to October, and probably nothing will have changed much by December from the information they had in September, because the economy in the U.S. is running along, not full steam, but it's doing pretty well. Unemployment might fall below 5%, which may be a trigger by December.
They're trying to balance out, there's no inflationary pressures. Now, you could argue, of course, that's because energy prices have come down.
Yep.
The labour market, despite unemployment being at 5.1, and again, she referenced it in her speech, from 10, we really haven't seen that much of a pickup in average hourly earnings. Their favoured measure, employment cost index, again, has moved up a little, but not as much as you would have expected. So I think there's debate within the FOMC is, where are those inflationary pressures going to come from?
The impact of Chinese growth on global growth is significant, and even on the United States. So the real crux of this issue is how much China is slowing and whether there's going to be a significant slowdown. If there isn't, then Janet Yellen's clearly signalled to us she's going to go ahead and hike.
I think the best you can do is to try and describe what would cause you to change your mind and what you're assuming in what you're doing. The difficulty is the markets often take their eye off the ball. So you say, you know, we may be raising rates, and the markets just don't necessarily take enough notice of what happens to data that would cause you to change your mind. But I think the speech from Yellen yesterday was really interesting. It is now more likely that the Fed is going to raise rates because they really have their eye on domestic conditions, and they don't think that conditions in emerging markets are sufficient to really knock them off that course.